Imagine you are sitting at home after midnight, thinking about somebody who stopped answering your messages. You open a marketplace. Not a hidden forum, not some encrypted corner of the internet. A normal marketplace with profile pictures, star ratings, delivery times, reviews, packages, checkout buttons, and customer support. And there it is, a love spell. The transaction can look almost boring. Choose a service, enter a name, sometimes a date of birth, sometimes a photo. Pay. Wait. Then an email arrives with some combination of a written description, a photograph, a short video, or another digital artifact showing that a ritual was performed. Some versions cost less than dinner. One seller we found offered a digital love ritual for $19. Another listed a personalized service for $37. Another sold a private reconciliation ritual for just under $100. On Fiverr, one U.S. seller advertised a love spell service with a base price of $125. And that is where this stops being merely strange and starts becoming a business story. Because the customer is paying for a result that is unusually difficult to verify in the way we verify ordinary services, if you hire a plumber, the leak either stops or it does not. If you buy a chair arrives. If you pay someone to edit a video, you can open the file and judge the edit. But if you pay for a ritual intended to improve a relationship, what exactly counts as delivery? The ritual itself? The photo of the candles? The written explanation? A later text message from the person you miss? A change in how you feel? And if nothing changes, how do you separate an ineffective service from bad timing, chance, or a promise that was never objectively measurable in the first place? Now add one more contradiction. As of August 2026, Fiverr openly maintains a spell casting category with more than 2,900 services. The platform gives those sellers the same basic commercial machinery it gives other freelancers: listings, reviews, packages, delivery windows, extras, and repeat client tools. Etsy takes almost the opposite position. Its current policy explicitly says metaphysical services such as spell casting are prohibited. Yet recently indexed Etsy pages still showed products described as reconciliation spells and love spells, often packaged as digital downloads with personalization fields. So the real mystery is not whether magic is real. The real mystery is how ordinary e-commerce machinery can turn an immeasurable promise into something searchable, comparable, reviewable, and purchasable. And once that happens, the economics become surprisingly familiar. Start with the buyer, because this business makes the most sense from the checkout screen. The product page has to solve an awkward problem. A seller cannot put a physical reconciliation on a shelf. There is no standardized unit called one successful romance. There is no shipping weight for restored affection. So the service is reconstructed out of things that can be selected and delivered. Personalization is one of them. In recently indexed spell listings, sellers asked for details such as names, dates of birth, relationship context, and sometimes photographs. That turns a generic listing into something that feels specific to one customer. The ritual may be intangible, but the order form is concrete. There is a practical reason this matters. A marketplace works best when a product can be converted into fields, options, prices, and deadlines. The more clearly a seller can translate an unusual service into those familiar pieces, the less unusual the purchase feels. Consider the range we found. One independent seller offered a private reconciliation ritual for $99.99. The page included selectable levels of intensity and described a follow-up email containing ritual details, a photograph, and a short video. Another seller offered a $19 digital ritual video that was delivered instantly by email with lifetime access and no physical product. Another offered a $37 personalized service with an emailed write-up and an advertised 60-day money-back guarantee. Those are very different products operationally. The $19 video can be distributed repeatedly after it has been produced. The marginal work of delivering one more copy can be very small. The private ritual, by contrast, is presented as individualized work with a specific customer, specific details, and specific documentation. From the buyer's perspective, both can still sit inside the same mental category. I am purchasing a ritual connected to my situation. From the seller's perspective, they are two different business models. One behaves more like a digital product, the other behaves more like a bespoke service. And between those two extremes is an entire ladder of packages, enhancements, written reports, photos, videos, and personalized options. That ladder solves another difficult problem. How do you charge more for something whose outcome cannot be measured in ordinary units? You add observable features around the promise. More personalization, more time, more documentation, a more elaborate ritual, an additional follow-up, a guarantee, a higher tier. A bundle. None of those things proves a supernatural result. That distinction is essential. They are features of the commercial product, not evidence that the external outcome occurred because of the service. But commercially, features are enough to create choice, and choice is enough to create a price ladder. This is why an online love spell can look less like a mysterious ceremony and more like a menu. Basic, enhanced, premium, photo included, video included, faster delivery, additional ritual, additional reading. The strange part is the subject matter. The commerce architecture is completely ordinary. That ordinary architecture also lowers the emotional barrier to trying it. A $15 or $19 purchase does not require the same level of conviction as a $1,000 commitment. A buyer can be curious. A buyer can be skeptical. A buyer can treat the purchase as entertainment, a symbolic act, or a small gamble on possibility. The Wall Street Journal reported one example of a U.S. college student paying $15 for a spell while looking for a job. That example was not a love spell, and it does not tell us how all customers think. But it demonstrates an important feature of the broader online spell economy. A spiritual service can be priced low enough to become an experiment. That changes the customer question from, "Do I believe this completely?" to something much easier. Is this worth $15 or $20 to try? And when a service reaches that threshold, the market can become much larger than the stereotype of a tiny group of absolute believers. But how large? That is where we have to be careful. There is no reliable public number for the size of the U.S. online love spell market in the research we reviewed, so we are not going to invent one. What we can measure are the surrounding behaviors and the marketplaces where these services are sold. Pew Research Center found that 30% of U.S. adults said they consult astrology or horoscopes, tarot cards, or fortune tellers at least once or twice a year. That does not mean 30% of Americans buy spells. It is a broader category of spiritual or divination activity. But the details are more useful than the headline number. In that survey, 20% of U.S. adults said they engage in at least one of those practices, mostly for fun. 10% said they do so mostly because they believe the practices provide helpful insights. Only 1% said they rely on them a lot for major life decisions, with another 5% saying they rely on them a little. That distribution matters for this business. It suggests that participation in adjacent spiritual services does not require the customer to hand over control of their life. A large part of the audience can treat the experience as entertainment, curiosity, reflection, or low-stakes experimentation. A separate Pew study found that 30% of U.S. adults believe spells, curses, or other magic can influence people's lives. Again, belief is not evidence that a spell works, and belief is not evidence that a person buys one, but it establishes something commercially important. The idea of magic influencing life is not so culturally marginal that a marketplace seller has to educate every potential customer from zero. There is already an audience that understands the language. Now look at Fiverr. In August 2026, its spellcasting category displayed more than 2,900 services. That number is a marketplace snapshot, not a count of unique full-time businesses. Some sellers may offer multiple gigs. Listings can appear, disappear, or change. It is not a revenue estimate. But it does tell us this is not one lone seller with a homemade website. Fiverr has turned spellcasting into a browsable service category. There are ratings, seller levels, delivery times, packages, starting prices, search ranking, profiles, reviews. And one observed listing makes the scale more tangible. A U.S. seller offering a $125 Love Spell service displayed 8,200 completed orders on the indexed page, with a 4.8 rating from 1,243 reviews. Those numbers do not prove that any supernatural outcome occurred. They prove something different. Marketplace activity. People are willing to transact around this category in meaningful numbers, and at least some sellers can accumulate the same kinds of visible trust signals that matter in much more conventional freelance work. That changes the business problem. If there are thousands of competing services, the challenge is no longer merely persuading someone that a spell can be purchased online. The challenge becomes differentiation. Why this seller instead of another? Why this ritual instead of the cheaper one? Why this package instead of the basic version? Why pay $125 when another listing starts at $5? And those are not mystical questions. They are product design questions. Once there is a crowded marketplace, a seller has to build a catalog, create pricing architecture, generate reviews, reduce uncertainty, and convince a buyer that this particular service is worth more than a nearly identical thumbnail one row below. So, the next step in understanding the business is to forget, for a moment, about the promised outcome and look at the product itself. Because online, a ritual has to become an SKU. An ordinary manufacturer changes price by changing materials, size, performance, or quantity. A hotel charges more for a larger room. An airline charges more for a better seat. A software company charges more for additional features. An online spell seller needs an equivalent system. And the easiest way to see it is to compare two extremes. At one end is the $19 digital ritual video we found. It is delivered instantly by email. The customer receives lifetime access. There is no physical item. From an operational point of view, that is powerful. The content can be created once and distributed repeatedly. There may still be costs for the website, payment processing, advertising, customer service, content production, and the seller's time. We do not know the seller's full cost structure, so we cannot calculate a true margin. But the delivery itself scales differently from a one-on-one service. At the other end is a private ritual presented as specific to one customer. One seller priced a reconciliation ritual at $99.99 and offered selectable levels described as different power options. The customer was told they would receive details about the ritual, a photo, and a short video. That is not just selling a hoped-for external outcome. It is also selling visible evidence that labor or performance took place. Again, the photograph is not proof that magic affected another person. It is proof that there is a photograph of a ritual setup. The video is not proof of reconciliation. It is a deliverable showing performance. That distinction is where the product becomes commercially interesting. When the ultimate outcome is difficult to verify, the seller can move value toward things that are easier to verify. Personalization happened. A message arrived. A photo was created. A video was delivered. A ritual was described, a written interpretation was sent. Those components give the buyer something to evaluate before any external life event occurs. Then comes tiering. One seller we reviewed offered love-focused spell casting from $40 to $247.50, with optional enhancements. The exact spiritual language is not what matters here. Commercially, the structure is familiar: a base product plus upgrades. Another seller offered a $37 personalized service and attached a 60-day money-back guarantee. A guarantee does not prove that the claimed outcome is substantiated. The Federal Trade Commission explicitly says a money-back guarantee is not a substitute for having a reasonable basis for objective advertising claims. But as product design, the guarantee can reduce purchase anxiety. Now, combine these tools. A low-priced entry product attracts curiosity. A personalized version increases perceived relevance. A premium ritual creates a high anchor price. A photo or video creates a visible deliverable. An enhancement increases average order value. A follow-up keeps the relationship open. A guarantee can reduce perceived risk. This is exactly the kind of architecture used in beauty services, coaching, software, digital courses, freelance work, and almost every other online service business. The unusual thing is what sits in the center, and because the service is digital or remote, geography matters less than it would for a local storefront psychic or a physical shop. The seller can reach customers far outside their city. The customer can buy privately at any hour without an appointment if the product is asynchronous. That creates another form of scalability, but it also creates a credibility problem. If the seller is remote, the customer cannot evaluate a physical location. They cannot shake a hand. They may never speak face-to-face. The service may be delivered entirely through marketplace messages and email. So the business has to replace physical trust with digital trust. That is where reviews, order counts, seller badges, platform dispute systems, and visible packages become more than cosmetic. They become part of the product. Before we get to reviews, though, there is a simpler question. If a $125 spell sells on a platform, where does the money actually go? Fiverr gives us a rare opportunity to make this strange business mechanically ordinary. Take the observed love spell listing with a base price of $125. Fiverr says freelancers receive 80% of the completed purchase amount, including extras and tips. So on a $125 base order, the freelancer's platform payout would be $100 before considering any of the seller's own taxes, advertising costs, labor, materials, refunds, or other expenses. We do not know those expenses, so $100 is revenue from the order, not profit. Now, look at the buyer side. Fiverr's current help page says buyers pay a standard 5.5% service fee, plus an additional $3.50 on orders under $200 before applicable taxes. Apply that to a $125 order, and the buyer would pay about $135.38 before tax. The freelancer receives $100. The difference, about $35.38, is the platform's gross spread on that simplified transaction before Fiverr's own costs. That is not Fiverr's profit. The platform has payment costs, infrastructure, support, marketing, risk, and many other expenses. The point is simply to make the economics visible. A $125 spiritual service can generate a very conventional marketplace split. Buyer pays more than sticker price. Seller receives less than sticker price. Platform monetizes the gap and the transaction infrastructure. And that infrastructure is valuable precisely because it solves problems the seller would otherwise have to solve alone. Discovery, checkout, payment processing, ratings, messaging, order management, customer support systems, Repeat client tools. Fiverr even advises sellers generally to create multiple packages at different price points, use extras, and make custom offers. Its Seller Plus tools include features such as coupons for repeat clients and follow-up capabilities. So imagine the commercial ladder from the seller's perspective. A buyer arrives for one service. The seller can offer a higher package. The buyer may choose an extra. A custom offer can be created for a more specific request. A satisfied customer can be targeted for repeat business. This does not mean every spell seller uses every feature. It means the platform provides the same revenue expansion machinery to this category that it provides to other freelance categories. And that may be one of the most important reasons these services can scale online. The seller does not need to invent a business system from scratch. They plug an unusual product into a mature marketplace system. That system also creates a striking asymmetry. For some digital products, the cost of serving one additional buyer may be relatively small. A reusable ritual video is an obvious example. For bespoke services, capacity is limited by the seller's time. But even there, the seller can use price tiers to decide how much attention each order receives. So gross margins may look attractive from the outside, but we need to resist pretending we know them. We do not know customer acquisition cost for these sellers. We do not know how much time a personalized ritual takes. We do not know refund rates, chargebacks, advertising spend, or the value of any materials used. What we do know is the platform economics and the visible price architecture. And those visible pieces tell us something important. The transaction can support both a seller and an intermediary because the customer is paying not only for whatever the seller says the ritual represents, but for an entire layer of marketplace certainty. The buyer sees a profile. The buyer sees reviews. The buyer sees completed orders. The buyer sees a delivery promise. The buyer sees a platform around the seller, which means the next economic asset is not the ritual itself. It is reputation. Suppose two spell listings appear side by side. One has no reviews. The other has a 4.8 rating, more than 1,000 reviews, and thousands of completed orders. Even if you believe both sellers are offering something that cannot be objectively measured in advance, the second listing looks safer. Not because the reviews prove a supernatural effect, they do not, but because they reduce other kinds of uncertainty. Did the seller respond? Did the seller deliver something? Did previous customers feel satisfied enough to leave positive feedback? Does the seller appear to have a track record on the platform? That is a subtle but powerful shift. The marketplace does not have to prove the metaphysical claim in order to make the transaction feel more legible. It only has to provide familiar signals around the transaction. This is why ratings are economically valuable in so many categories where quality is subjective. Restaurants, therapists, freelancers, hotels, coaches, consultants. And in the case of spiritual services, the review system may matter even more because the promised outcome is unusually hard to attribute. If a relationship improves after someone buys a ritual, was the ritual responsible? Was it coincidence? Did the buyer behave differently? Did circumstances change on their own? A marketplace review cannot answer that. The Federal Trade Commission's guidance is clear on the broader advertising principle. Testimonials are generally not substantiation for objective claims that require objective evaluation. So, a pile of 5-star reviews is not scientific evidence that a supernatural service caused an external event. But commercially, it can still be persuasive. That is the paradox of the review economy. Reviews can be weak evidence of causation and strong evidence of trust at the same time. The difference is what question the buyer is asking. Did this seller reliably send what they said they would send? Reviews may help. Will this ritual objectively make a specific person return? Reviews cannot establish that as a verified fact. This distinction matters because reputation systems are now regulated business infrastructure, not just decoration. The FTC's Consumer Reviews and Testimonials Rule took effect on October 21, 2024. It targets deceptive practices involving fake or false reviews and testimonials and gives the agency civil penalty authority for knowing violations of the rule. That means a seller operating in a trust-heavy category has two simultaneous incentives. First, accumulate strong reviews because reviews help conversion. Second, avoid deceptive review practices because the trust asset itself can create compliance risk. And on a marketplace, review concentration creates another hidden barrier to entry. A new seller may be able to copy the format of a listing. They can offer similar tiers. They can use similar imagery. They can price lower. What they cannot instantly copy is 8,000 completed orders or more than 1,000 reviews. That history belongs to the account. So reputation becomes a form of capital, not physical capital, digital capital. A seller's review count, account age, completion history, and marketplace status can become the moat around a service whose core ritual may otherwise be difficult for an outsider to differentiate. But that moat has a landlord. The marketplace controls the account, the ranking system, the category, and the rules. And this business gets especially strange when two major marketplaces answer the same category question in opposite ways. On Fiverr, spellcasting is a category. On Etsy, spellcasting is prohibited. That single contrast may explain more about the fragility of this business than any discussion of candles, rituals, or spiritual language. Etsy's current policy says metaphysical services such as Reiki and spellcasting are not allowed. The same policy makes a narrower allowance for tarot or psychic readings when the seller includes a physical or digital copy of the reading. That is an important distinction. The platform is not simply dividing products into spiritual and non-spiritual categories. It is drawing a line around what kind of deliverable is permitted. Now comes the contradiction. Search engines in 2026 still indexed Etsy pages described as reconciliation spells and love spells. Some appeared as digital download products. Some asked buyers for names, birth dates, relationship context, or photos. In the examples we reviewed, prices ranged from only a few dollars to roughly $50. This does not mean Etsy approves those listings. It does not mean the listings are compliant. It does not mean they will remain online. It means platform policy and platform enforcement are not always the same thing at every moment, and recent reporting has documented exactly this tension. The Washington Post reported on online witchcraft sellers using Etsy. The Financial Times later reported on increased enforcement pressure and the difficulty spell sellers faced as Etsy tightened around its stated rules. For a seller, this is concentration risk in its purest form. A business can build demand, reviews, repeat customers, and income on a platform, only to discover that the category itself sits outside the platform's long-term policy. One Washington Post case makes that dependence concrete. A reporter bought a $15.99 spell from an Etsy seller. The seller told the paper that Etsy was her only platform for selling spells and her primary source of income. The article reported that she had made close to 11,000 Etsy sales since joining in 2022. Again, that is one seller, not an industry average. But one seller is enough to illustrate the structural risk. If your storefront, search visibility, review history, customer messages, and checkout all live inside one marketplace, you do not fully own distribution. You rent it under the marketplace's rules, and those rules can differ dramatically. Fiverr currently gives spell sellers a category, packages, reviews, and order infrastructure. Etsy's written policy says the service itself is prohibited. So, a seller's most important strategic decision may not be which ritual to offer. It may be where to sell it. Independent websites reduce direct marketplace policy risk, but they create different problems. The seller now has to attract traffic, build trust without a giant platform brand, handle payments, manage disputes, and persuade a stranger that the site is credible. A marketplace solves those problems, but in exchange it takes fees and retains rule-making power. That trade-off is common across e-commerce. What makes this category unusual is how existential the rule can be. For a normal craft seller, a policy change may affect one material or one listing format. For a spell seller, the platform can decide the underlying service category is not permitted. And that brings us back to the buyer. Because if these services can survive even under unstable platform conditions, there must be something on the demand side that is stronger than simple novelty. The easy explanation would be to call customers gullible. It is also the lazy explanation. The data and the reported buyer stories suggest something more complicated. A person can buy a movie ticket without believing the story is real. A person can buy a lottery ticket while knowing the odds are terrible. A person can visit a fortune teller as entertainment without reorganizing their life around the prediction. Spiritual services can occupy similarly mixed psychological territory. That is why the Pew data matters. Among U.S. adults who engage with astrology, tarot, or fortune tellers, a significant share say they do it mostly for fun. Only a small minority say they rely heavily on these practices for major life decisions. This does not tell us exactly why someone buys a love spell, but it warns us against dividing the market into only two groups: total believers and total skeptics. Real customers can occupy the space in between. Curious, hopeful, entertained, anxious, interested in ritual, looking for a sense of action when a situation feels uncontrollable. Some of those descriptions are interpretations, not universal facts. So the most responsible way to understand the value proposition is through documented examples. The Washington Post reporter who bought the $15.99 Etsy spell wrote that she did not observe an objective change in the situation by the time of publication. But she also described feeling somewhat more hopeful. That is one person's experience. It does not prove a general psychological effect. But it reveals something economically important. A transaction can create value before the promised external result is established. The customer receives attention to a specific problem. They submit personal details. A seller performs or describes a ritual connected to those details. The customer receives photos, a video, a written message, or some other artifact. The buyer may feel they have done something. The commercial product contains a sequence of actions that can make the purchase feel personalized and consequential. And personalization is valuable in many businesses precisely because it transforms a generic service into a story about the customer. Think about what a love spell order form does. It asks for a name, a date, a relationship history, maybe a photograph. Those fields do not increase the physical quantity of the product. They increase specificity. Specificity is one of the oldest ways to increase perceived value in services. A generic horoscope is free in a newspaper. A personalized reading costs money. A generic meditation video may be free online. A private coaching session costs more. The same economic principle can apply here without making any claim about supernatural efficacy. The product becomes about me, and low prices make that personalization easier to sample. For $15 or $20, a buyer does not need to reach the certainty threshold required for a major financial decision. They only need to decide the experience is worth the price. That may also explain why the product ladder is so important. The seller can meet a curious customer at the bottom with an inexpensive digital option. If the customer wants more specificity, more ritual labor, more documentation, or more interaction, there is a higher tier. If the customer returns, the seller can make another offer. The business does not require every person to buy the premium version. It requires a flow of customers across different levels of commitment. This is a familiar funnel wrapped around an unfamiliar promise. And the more the promise becomes specific, the more carefully the seller has to think about advertising language. Because in the United States, unusual beliefs do not create a separate universe of consumer protection rules. The claim itself still matters. The Federal Trade Commission's basic advertising standard is not mysterious. Advertising should be truthful and non-deceptive. And when an advertisement makes an objective, express, or implied claim, the advertiser needs a reasonable basis for that claim before making it. The agency also says a money-back guarantee does not substitute for substantiation. That matters in a business where the line between describing a ritual and promising an external result can become blurry. There is a meaningful difference between saying, "This purchase includes a personalized ritual, a photo, and a written description," and making an objective promise about what another person will do afterward. The first describes a deliverable. The second may become a performance claim. We are not declaring any specific seller illegal or fraudulent. Consumer protection questions depend on the actual wording, context, jurisdiction, and conduct. But the general business constraint is clear. The more specific and objective the promised outcome sounds, the more important substantiation becomes. This also explains why disclaimers, entertainment framing, guarantees, and careful language appear around many spiritual services. They are not interchangeable, and none is a magic shield against deception rules. But commercially, they can help define what the seller says the customer is buying. Reviews sit inside the same problem. A seller may have hundreds of glowing testimonials. Those testimonials may be persuasive. They may describe genuine customer satisfaction. But FTC guidance says testimonials are generally not substantiation for objective claims that require objective evaluation. So the seller cannot simply convert a wall of positive reviews into proof of a causal, supernatural result. And since October 2024, the FTC's Consumer Reviews and Testimonials Rule has added specific restrictions around fake or false reviews and related deceptive practices. The reputation engine has rules of its own. This creates a strange incentive structure. The seller wants the product to sound powerful enough to buy, but the business is safer when the deliverable is described in terms that can actually be fulfilled and documented. Personalized ritual, written reading, video, photograph, session, follow-up. Those are observable. A guaranteed change in another person's emotions or behavior is a different kind of claim. So, one hidden skill in this business may be promise design, not just product design. How do you make an offer compelling without turning the sales copy into a claim you cannot substantiate? How do you use reviews without treating them as proof of efficacy? How do you create urgency without making the transaction deceptive? How do you promise a ritual strongly enough that the buyer sees value while keeping the observable deliverable clear? Those are marketing questions, legal questions, and platform policy questions at the same time. And even if a seller answers all of them well, one major risk remains outside their control: distribution. Return to the seller with thousands of completed orders and more than 1,000 reviews. That history is valuable. A new competitor cannot manufacture it overnight. It helps the listing rank, convert, and feel established. But where does that history live? On the platform. The same is true for the buyer relationship. A marketplace can provide search traffic, checkout, messaging, reviews, dispute systems, and tools for repeat clients. Those systems let a small seller operate with a level of commercial infrastructure that would be expensive and difficult to build independently. In exchange, the marketplace takes fees and retains control. That control is not theoretical in this category. One platform currently hosts thousands of spellcasting services. Another says spellcasting is prohibited. Recent reporting has documented sellers dealing with enforcement pressure when marketplace rules close around the category. So the seller's most valuable asset may also be the asset they least control. Access to the customer. The storefront can be polished. The ritual can be personalized. The review count can be impressive. The repeat purchase system can work. But if discovery depends heavily on one marketplace, a policy decision can damage the business faster than a competitor can. That is concentration risk. And the same idea extends beyond marketplaces. A seller who depends on one social platform for traffic has algorithm risk. A seller who depends on one payment channel has payment access risk. A seller whose reputation is concentrated in one review system has reputation portability risk. We did not find enough verified data to quantify those risks for the average spell seller, so we should not pretend there is a universal percentage. But the Etsy and Fiverr contrast gives us a real structural example. The category itself is not universally treated the same way by the platforms that connect buyers and sellers. That means a robust business would ideally diversify distribution, own more of the customer relationship, and make the deliverable clear enough to survive scrutiny outside a friendly marketplace. But doing that is expensive. An independent site has to earn trust from scratch. It has to buy or generate traffic. It has to handle checkout and support. It has to persuade a customer without borrowing the credibility of a giant marketplace. So the platform fee is not just a tax on the seller. It is payment for borrowed infrastructure and borrowed trust. And that brings the entire business back to the original checkout screen. At first, the strange part was the spell. After an hour of following the money, the strange part is how normal everything around it becomes. There is a customer acquisition funnel. There is a product ladder. There are low-ticket entry offers and higher-priced personalized versions. There are service fees. There are upsells. There are ratings. There are repeat client tools. There are refund policies. There are advertising rules. There is platform concentration risk. There is even the familiar tension between selling through a marketplace and owning your own distribution. The supernatural claim sits inside a completely recognizable internet business machine. So, what is a customer actually buying when they buy a love spell online? The research does not let us say that a ritual causes another person to return, reconcile, or fall in love. Reviews do not establish that. Seller claims do not establish that. A photograph of candles does not establish that. What we can observe is the commercial bundle. Personalization. A ritual or the representation of a ritual being performed. A written explanation. A photograph. A video. A marketplace transaction. Attention focused on one customer's problem. A review system that reduces uncertainty about the seller. And, in at least one documented buyer experience, a small sense of hope even without an observed objective change. That may be enough to make the purchase valuable to some people without requiring us to decide what they believe. And for the seller, that ambiguity creates both the opportunity and the risk. The product can be delivered remotely. It can be tiered from cheap digital content to expensive personalized service. It can be sold through the same infrastructure used by ordinary freelancers. But the business depends on trust around an outcome that is hard to measure, careful advertising around claims that can cross into consumer protection territory, and platforms that may disagree about whether the service belongs there at all. The strongest moat may be 1,000 reviews. The biggest threat may be one policy page. And the most valuable part of the product may not be a promise that can be measured. It may be the experience of turning uncertainty into a transaction that feels specific, documented, and actionable. That is the strange margin here. Not magic versus skepticism, but the fact that the internet can take something as intangible as a wish about another person's feelings, wrap it in packages, ratings, service fees, and checkout buttons, and make it look like any other product waiting in your cart.